Morning. All right. Hope you had a nice weekend. You guys ready for some Forex? What's going on, my friend? How are you? Got to look at the stock market. Got to look at the Japanese bond market. Go through the calendar. Nick Fisher said, hey, solid music choice. Thanks, I got it at a Trump rally. Anywho, como talibou. All right, so yeah, let's get on with it. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Hey, where'd my glasses go? Where are my Tom Fords? Where are my glasses? I don't have any glasses. Anyways, I'll have to wing it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey. By the way, I've been getting feedback over several weeks now, and I've been trying different things, but of my microphone. So it's really, really good. And then when I say perfection, preposterous, the mic pops. Is it better down here if I keep it close but lower? Just let me know if it does that popping and it annoys you. Just let me know. We will adjust it. Okay. So anyways, just give me feedback if it's happening. Let me know. And we'll try again. It's not a problem. It's an opportunity to improve. All right. So anyways, cool. So what are we going to do today? Why don't we go through the calendar? Then we'll go through gold, oil, Bitcoin. Then we'll go through dollar pairs and yen pairs. Sounds like a pretty normal Monday. Thank you. It's more like when I say preposterous and it pops like that. But maybe I'll just keep it lower. So anywho, yeah, so it sounds like a pretty normal morning. So let me know how I can help, and I will do my best to address your needs. There are other links to in the description to other resources for help. My book is in the description below. My chart templates are in the description below. My free training courses are in the description below. My premium courses and my live trading groups are available via link in the description below. And there's a link also to tradersway.com. I recommend you use Traders Way as your foreign exchange broker. They earned my loyalty and respect when the market was in duress and other brokers went out of business. Traders Way was absolutely fine. I also see every day that their swaps are significantly bigger, which is better, than most. Cool. So that's great. Their execution speed is fast. Their spreads, I'm telling you, are great. I mean, it's the full package, real deal. Give them a shot. That's why I recommend them. Give them a shot. See if they can earn your loyalty and respect. But I think that's the type of execution partner you want when you develop your successful Forex trading business. Back when I was a young entrepreneur, when we looked at service providers, you had people that would introduce you to VCs, but then even the type of VC or the type of angel you accepted into your company was important. The brand name was important. What law firm did you use? What accounting firm? And now when in Forex, later on when you develop into a foreign exchange business that maybe trades other people's money, once again, those things are going to be important. Who does your auditing? Who's your law firm? Who's your compliance firm, for example? Okay? You're like, oh, well, I have a really good, I have a really good accounting firm. Its name is Dewey, Cheatham, and Howe. Mm-hmm. Oh, needed coffee today. I don't know why. Went to bed early and everything. It destroys. So, last night at the Asia Open, I got together with the day trading group and I was risk off. Cool. This is one of the charts that we were just talking about. So I haven't touched this account since then. But so I guess we can just pick up here. What do you see? First of all, it's a weekly chart. So it's taking, a broad, long look at what the market is. Analysis of the market says that there's an uptrend. You're thinking Y equals MX plus B. I know. Okay. What else do you see? Well, so there's a positive slope. Obviously, the trend is somewhat up. Okay, has been for a while. When you're measuring sort of, this is the average price over this time. We don't say average though, we say mean. Okay. When I was in high school, I didn't like average girls. I liked mean girls. All right. Cool. So anyways, we seem to be possibly in a situation of reversion. Okay. Doesn't mean downtrend, does it? No, but there's this quantitative analysis that says, well, price is jumbling around the mean price and sometimes deviates from the average and then comes back and deviates from the average and comes back and then deviates from the average and comes back. And now we're, if you will, an average deviation, standardized, because it's saying, well, when it moves away from the average, it moves here, and then it gets too far, reverts back to the mean, then goes away from the mean, and then reverts back to the mean, right? Reverts away from the mean, and when you look at the distance of these deviations, it's reverting back. Cool. So in this scenario, this might be interesting for you, planning out your week in advance. You can say, well, we're going to come back to the average. Cool. Sometimes, though, we go back to the average and then divert from the average by following through. So you might want to consider it like there's two things that could happen here. Okay. One would be return all the way back like this. What do you think of that idea? The next one would be something like that. Now, we really don't know. You might have an opinion leaning towards one or the other. Doesn't matter to me because we don't know the future, do we? But you can see how important maybe this one candle is. Can you see that? So when looking at this week, the next 5 days, I'd like your opinion here. How many people think price will go to 94 and above? So greater than 94. How many people here believe price will be greater than 94 on this pair? Oops, I guess it's this way. Okay, greater than 94, this is weekly, on this candle. Say yes or no. Price, we're at 92 right now. That we will be 94 or higher at the end of the week. Okay. I don't know. I have to create trade plans. Okay. So wouldn't that be what you're doing now, or even better yesterday, right? That if you don't think up, then somewhere between here. So there's the 0% retracement line. Here's the 100% retracement line. Okay. Somewhere between that, you need to sell. Okay. Yeah, we watched it in real time last night, Sander. It was crazy. It was crazy. So I want to ask you one more question then. If you don't believe we're going to be higher than 92, what percentage retracement are you going to look for? 21, 38, 50%, 618. Well, okay, well, 6-1, not 6-2. 618 or 786. Okay. Which retracement are you going to sell this week? Based on your belief. So I'm going to drop into maybe a daily. No, weekly. Weekly. I want an answer on weekly. Because we're really discussing that. Now, maybe Monday to Friday is really arbitrary. Maybe what we care about is actually just the lower low, lower high. Now, in that case, NFP gave you you're short at 94, which is 618 Fibonacci retracement. Okay. So here's the thing. Okay. That's already occurred. What? Is that right? Marinus says never trade Aussie yen. That's interesting. Yeah, so there's a bit of a divergence. It's across. Not everything agrees. You know what was interesting, Marina? I shorted pound dollar last night, and I think I was up $40. 40 pips. Moved my stop to break even. It seemed pretty good. And woke up this morning, busted out at break even. I'm like, huh. Something happened there. Something happened there. So anyways, so here's some food for thought on this pair. That would be how you swing trade, by the way. And yes, I am in this trade from at last night, actually. About the 382. Just an FYI. Michael, how is that even possible, Michael? So I'm not even sure what that was because, you know, I was sleeping. So that's part of my homework today to say, what the happened there? What the... Anyway. All right, so we can contrast and compare this. So here's also a weekly chart. Okay? Not bearish, for sure. Okay? Not bearish. I think we could all agree. But something is happening, isn't it? Quite a top here. So, let's take a look at this differently. Where would a bear sell? Okay. Well, one basic measure, okay, an iceberg order might influence. I don't know what the hell an iceberg order is, Sammy. Sounds like something a guru is selling in a training course. All right, so let's look at something basic, guys. You have to decide what the month of May is going to yield. If you're a bull, this is a very simple swing trade. That's what's going to happen in May. Very simple. Okay? If you're a bear, that's what your trade plan is. Simple. Let me know which one. And, you know, look, if your plan is to take it down to S1 but not M1, like, don't, just up or down, bull or bear is all I'm asking. In this scenario, I want you to tell me bull or bear. This is your projection for pound yen the month of May. We're not even really interested in target. I just want to know up or down based on what you see here. Don't give me your opinion. Okay, now while you think about that, you might be saying this is pure technical analysis going up. These giant green candles were created by yield curve control by the Bank of Japan. That may not exist in the future, by the way. Or much of the yield curve control impact on currency has already taken place. This isn't necessarily the free market, bulls and bears banging out the pound yen to find a fair market value. These candles are very much the Bank of Japan. So, be careful. Okay? So, some people say up, some people say down. Good. what I want you to focus on this week is where we are relative to last week. Okay? All right. If you are a bear, should this make a price above, should we print a price above 164? We're at 162 now. Okay. So therefore, if you are a bear, you could consider somewhere between 162 and 164 your top, because what you're planning, I want you to think about what you're actually planning. Okay? You're planning that this candle, this green candle, will be a red candle, which means we start here. Okay, we start here. It goes up for a while. Let's say makes a 50% retracement of the range of this low to this high, and then comes back down, and by Thursday or Friday, okay, we're actually lower. And you'd have to print a lower low, lower than this low. Okay. Now Marina says $1.64 and some change will make her more bullish. Yeah. But the question is, well, what's going to happen this week? If you're a bear, you're going to look for that where somewhere like today or tomorrow, certainly by Wednesday, whatever green is happening should end, and then it should turn red. Okay? Because now, and I know I'm being Captain Obvious, now you would drop into a smaller time frame, and this is helpful for a lot of people that get stuck on multiple time frames. What happens is they chase price around, right? But if you wrote this down, if you actually drew it, you could say, well, your plan for the week is this. So if this goes up for 1 or 2 days, all that's doing is giving you a better price for your plan. Where other people might just chase price like, oh, it's bullish today and bullish tomorrow and bearish the next day and bearish, and you're like, where are we going? I want you to have some sort of plan in place. High, lower high. Okay? And then somewhere in the future, yet another lower high, right? Is that what you think? I want you to have your plan in place first. Okay? Do you think somebody had this planned in advance? I want you to think about it. Somebody shorted there at the end of April, somebody shorted there the 1st of May, and somebody shorted there after non-farm payrolls. Is that random? Or did some market participant, even an algo, which means somebody had to program the rules of engagement, did somebody have this as a plan? Okay? If the answer is yes, then I would then follow that question up with, well, what is your plan? You're like, I don't know. Okay? It might be helpful. Okay? Now, this chart is a little bit different from the Aussie. Okay? I was going over RSI last night with the day trading group, as you know, in comparing that to stochastics. And you could see that there's quite a bit of difference if I threw that down here on Aussie insert indicators, custom RSI. I throw it down, 70-30 is fine, whatever. Okay, and then we go to the weekly to compare apples to apples. Okay, what do we see here? Let me compare this. I want you to think about this. Okay, are they the same? See, if you were in a university course, we would say compare and contrast, and you'd have to write a paper. Okay, Sanders says bearish divergence. I got you, so let's mark that. Okay, what else? Remember, these are both yen pairs. There may be quite a difference between the Great British Pound and the Aussie dollar, but they're both on yen. So they need to make some sense together, even though they're, they contrast. We can also compare the similarities, and the similarity is the yen, right? So bearish divergence on pound yen could mean some weakness here on the top. And what we're looking at is there was a peak, and just so you know, I have this one set at 80, so it's even higher than this one. So there's quite a bit of divergence, and where price has made a very significant high relative to the previous high, and yet RSI is diverging. Well, we're talking about relative strength. So what is this saying? Bearish? No, but a lot less bulls. It's very definitely bullish, but there's not very many bulls there. It's a vulnerability. Okay? It looks very bullish. This happens a lot in war, where one side wants to attack the other and they overestimate the enemy's forces. And they're like, we shouldn't attack. Where they probably should, because you would have an advantage, right? But you look at it and you're like, you overestimate the enemy. In this case, it looks very, very, very bullish, but further inspection will tell you, yeah, but there's not very many bulls. It's bullish, and there's no way you could say that that's bearish, but it's vulnerable. A bear could take that house down. It's just looking for a reason. Okay? Is one way to interpret that. Now, do we have that on this pair? No. Okay? There was a high here, and it retraced. There's a high here. And then what? It could retrace. So that's pretty normal. This one's pretty normal. It's overbought, but remember, it's overbought because everybody's buying. What we're looking at for both of those is there going to be a pause in the buying? It doesn't mean a reversal. I mean, it could, but the thing is there going to be a pause? And when you're looking at weekly pivot points, a pause could be 400 pips down before the next 800 pips up. Okay? And so you're not really a bear per se. You might first just say it's a reversion play. Sounds really nice, huh? Is it a nice reversion? No, it's a mean reversion. Okay? Another way of looking at it is you expect bulls to take profit, or maybe you could even say bulls should take profit. Okay? Do you understand? Maybe you could just look at that. It's not a reversal. There's no reversal going on yet. There might be at some point, but all you see here is profit taking. So anyways, the next candle, right, aka this week, matters. So this did not make a lower low. We could have been down there last week, right? So like, look at this. Here's 2 weeks ago. There's the low, last week's low, and our current low. Okay? Last week's high, previous week's high, previous week's high. So we're in this. Okay? So you could say up from here if you wanted to. Okay, cool. You could. And someone else might be looking down that way. Okay? So you need to make your decision. That's all. Because then you know what you're looking for. Now, one piece of information that I have in mind, and it's dangerous. My further piece of information is dangerous because it would be based on what usually happens. What does usually mean? Base case model. What typically happens? What often happens? What can happen? What usually happens? This is not a usual year, is it? Okay? The United States is slowing down. Europe is basically locked down because of the war. It's kind of like lockdown. The economic activity because of rampant inflation and other concerns. Okay? They're basically locked down, and China's locked down. I want you to think about it where what we do as foreign exchange traders is we follow global trade, don't we? Because usually you sell something in exchange for money. So when a foreigner buys something from another foreigner, they have to exchange currency. That's what we do. That's what the FX do. But what if we're not trading with each other? Because in China, you're locked in your apartment. In Europe, you're hoarding your money because you have to spend it all on energy. In the United States, you're watching your retirement account drop by 25%, and you're like, we're not going to the Ritz-Carlton this summer. We're going to the Marriott Courtyard by Marriott. Okay, Courtyard. So you change your spending. You see, so activity could really slow down, and it changes things, and that would be unusual. But with that in mind, if you understand that, what I would say is usually this time of year you could expect that type of movement. So should I pay attention to this pattern? Or should I ignore that and say this is unusual, this is a floor, okay? This is a floor, and somewhere in here is the next up. And that's why it's dangerous, right? Because this is unusual, so maybe it requires unusual trades. So to break this back down, I'm watching this very carefully. Okay? And if we make a lower low this week, not that we will, but if we did, it would be significant. It would be an important week technically. Okay? And then you'd probably expect some, right, significant move this way, and then maybe a significant move that way. The thing is, you don't know, so do one of them. Do one of them well. Okay? Do one of them well. And if you're wrong, okay? It's a beautiful mistake. Na, 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 na. Ain't nothing inking in my bed, making beautiful mistakes. Na, 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 na. Nice advice. Morning, Robbie. Rodo. You guys click that thumbs up button. Let's see what you guys are trading. Let's move on to the next topic. Oh, and I apologize. I'm going to throw an ad at you. This is for YouTube, not for me. YouTube, please promote this channel. We're going to insert an ad so you can make 30 cents. All right, let's see what's on your mind. Dollar is on your mind. Sender has premium. Cool, man. That kicks in probably 5 cents worth of revenue for me. Getting rich off of YouTube. Make myself a nickel. You mean 5 grand? No, I mean a nickel. Yeah, cool. Sweet. All right. So we'll leave those alone. All right, so that's just sort of your Monday morning wake up, think about what's going on. I think we should do this. I think we should do some commodities, gold, oil, and Bitcoin. And then I think we should do the calendar. Making beautiful mistakes, trading down. All right, hang on. Cool. And then we'll do that. Okay? We'll do that. Wait, where did my chat go? Did my chat just die? Where's my chat? Oh my God. You're killing me. You're killing me, YouTube. No, there it is. Cool. Cool. Johnny says the 21 is below the 55 on the 4H, and Sanders like pound yen is also in a weekly sell zone, right? Look. You have to start strategically first. Excuse me. So however you get to that strategic decision, you're identifying why you believe what you believe. You're also identifying how you know you're wrong. That's right. You remember, like, I forget what the number was, but I said, for you bears, how many of you would still be bearish if we were above 94, right? Or should you still be bearish? Or would you still? And everyone's like, no. Well, then, okay, now then, and then you drop into a smaller time frame. Now you look at the other stuff. Oh, it's a weekly sell zone. Oh, well, the 21 crossed below the 55. Oh, well, look, you have to clear your mind of everything else before you make that first decision. Because we know if you drill into the smaller time frames first, okay, and make a decision, you're making nothing but tactical decisions. You're not thinking forward. You're not thinking 5 weeks from now. Like when I show you a weekly chart, do you understand? If you're able to sell, that you may be short for 3, 4, 5 weeks. And trust me, you're going to make more if you're right than 18 pips profit. And that's why I want you to start there first, because I'm convinced if all you do is pick up pennies here and pick up pennies there, 5 years from now, you'll still be picking up pennies. Right? instead of picking up pennies, you're probably better off learning how to play the guitar, open up your guitar case, sit there on a blanket, maybe have a cat next to you and play the guitar. Maybe people will throw pennies at you. It's just easier. Okay? And then you can watch the hedge fund manager walk by in a $3,000 custom-made bespoke suit. Not interested in picking up pennies. You understand? Now, scalping is important. Knowing how to do short-term price action is important. But it shouldn't be the end of your skills. Okay? Because now, if you can think 3, 4, 5 weeks in advance and you're a kick-ass scalper, you're going to do very, very well. Okay? Because your entries are going to be awesome. And because you're a scalper, assuming you're scalping properly, your losses are always going to be tiny. You understand? Your entries are always going to be right on time because you're a scalper. You know how to sell at resistance. Bravo, by the way. And when it all falls apart, you know your stop's close, again, because you're a scalper, so you don't lose a lot of money. That's it. But the upside is, because you're also thinking bigger, when you're right, you let it run. Excuse me. I don't know where that's coming from. I was thinking Ricardo or Russo? Is it David Ricardo? Sounds like a sitcom guy. Hang on, David Ricardo. Ricardo? A British economist. That sounds right. 1772. That's not the right guy, I don't think. Oh, look at that. He was a Whig. Interesting. Is it the right guy? Let's say it is the right guy. Would you consider this, if we were talking about Forex, if I was writing a book on Forex, and I said, let's read some of the teachings of David Ricardo from 1772. I guess it'd be over than that, right? Let's say 1800. Okay, let's say David Ricardo wrote this down in 1800. Would you consider that a long time ago if I was taking his words and applying it to Forex trading now? Yes or no? Like, would you be surprised this guy said something that is important to you right now as a Forex trader? I think it is this guy. I'd have to look at it. The theory of international trade. So I must be right. Comparative advantage. Yes, this is probably right. And by the way, answer the freaking question. Would you say, what? David Ricardo in 1800 gave me advice for today. Really? You wouldn't be surprised? I'm always surprised. Must be this guy. He went into business for himself with the support of Lubbock and Foster, the eminent banking house. He made the bulk of his fortune by profitably financing government borrowing. Okay, he was a bond trader. There's a story that he made his fortune as a result of speculation on the outcome of the Battle of Waterloo. Huh? The Russians! He made money off the Russians. Nice! Or was it the French? Sorry, the French. My bad. I was thinking the opposite of the Grand Army going the Russia. Sorry, the French. Sorry, my bad. Okay. During the battle, Ricardo netted upwards of £1 million sterling. So he became a billionaire. As a trader, by the way. Would you listen to this guy? He basically became a billionaire trading bonds, particularly speculating on bonds during a time of war. Okay, let's see if it'll say it here. By the way, would you want to read? He wrote a bunch of stuff when he was alive, giving you advice on how to trade. So then he became rich, so he got involved with the government, right? David Ricardo believed an increase in imports boosted the happiness of mankind. In my macroeconomic course, I spend 2 hours trying to prove to you that an increase in GDP, specifically through trading with foreigners, increases the standard of living and gives people a sense of self-worth. Holy crimoli. Now, maybe I was ripping off David Ricardo, but it's interesting, right? Okay? Okay, this is a big thing that I studied too. So, as the Napoleonic Wars waged on, David Ricardo developed a disdain for the corn laws imposed by the British. Corn not meaning corn like maize, but corn meaning all grains. Okay? Government intervention on the grain trade can be witnessed as far back as the 1400s, and trade has been controlled, regulated, and taxed. England was a capitalist economy involving workers and landlords consuming entire incomes and capital accumulation that depended entirely on capitalist profits that were under perpetual pressure during the 18th. Well, what this is it was capitalist, but then the government was socialist. If you were throwing down controls, then you are not capitalist, right? So they were getting involved in things like, what should you do with excess? Also, you got to remember, in here you have the Industrial Revolution going on, and there was also in this period, I believe, an English Civil War because of all these changes. Most of which was people moving from the farms into the big cities, right, and working in factories. We saw this in the United States as well. But understand, like the corn laws created barriers to imports. Why? They were protecting their local farmers. So why would you import cheap grain that would hurt your local farmers because no one would buy their grain? So then you would close the borders and instead pay your farmers higher wages. But you could just get it cheaper. Like in England, like let's not use corn, but let's say, Irish wool, or let's say Irish textiles versus Indian textiles. So if you brought in suddenly a whole bunch of Indian textiles because of your imperialism, as British imperialism, well then that really sucks if you're Irish because now your stuff is more expensive, right? So anyways, all this is going on, but I want you to think about this. What he's talking about is foreign exchange. And what's probably not going to be said in here is that a lot of what he was doing, yes, it was bonds and financing bonds and stuff, but what is it that we do? You say Forex. Well, no, that's too simple. We're macro, okay? So what are the subcomponents of macro? Fixed income. What's fixed income? Bonds. What are bonds? Loans. Where do you loan them? A shovel? A weed whacker? A money, honey. And we're money traders. Okay? Commodities. Okay? and currencies. Okay? So if you worked at a bank, you will work in the fixed income, commodity, and currency department. Because it's all money, honey. Okay? Do you spend your money on commodities for consumption, or do you have excess money and you loan it to someone else? Okay? Do you buy it to eat? Do you use your money to eat, or do you loan it out for profit? That's excess money. Okay? Japan doesn't have any excess money right now. It all goes to commodities. That impacts what we do, huh? So I want you to think about this. So at some point we'll get together and we're going to read some of Ricardo's stuff. In particular, I mean, it'll always go back to the corn laws. Okay? But one of the things it doesn't say here, value theory. Maybe it'll say here, and rent. Okay, Rousseau and Ricardo, you're going to end up doing things like the valuation of apartment buildings. I'm not joking. We'll do Ricardo and Rousseau. We'll go through what they wrote down, and we'll use that to create the value of an apartment building. Now, maybe in here, labor is a different value, of course, right? Capital and labor. Three main factors. No. I want to get to I don't think it's going to say it here. We have to study it more than a Wikipedia. Ricardo proposed that a ratio of gold and treasury bills, okay, would secure the central bank's liquidity. I mean, think about it. Dude, what's going on now? And imagine there were people 200 and something years ago. We're talking about the balance sheet at central banks based on the liquidity they're trying to provide to the market. And you're like, really? I mean, isn't that nutso? You might be learning this now, right? You might be learning this now, but isn't it amazing? Like hundreds and hundreds, your great, 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 great grandfather, okay, might have been studying the same thing that you're studying. I find it fascinating, of course. Okay? So anyway, so Adam Smith didn't have a central bank. Ricardo argued that that having a central bank was good. Okay? So we'd have to look at that, and then he's giving you advice on how to run your central bank, right? Okay, banking and farms, subsequent trade price affected new regulation. All right, anyways, I would have to look for it. We'd have to go through his book. What? As there can be security for uniformity in the value of currency. What? In 1816, Ricardo said, in the present state of law, they have power without any control whatsoever of increasing or reducing the circulation in any degree they think proper. So are they talking about central banks again? Yeah, monetary policy. Okay. A power which should neither be entrusted to the state itself or to anybody in it, as there can be no security for the uniformity of the value of the currency when its augmentation or distribution depends solely on the will of its users. So he's saying limit the power to the central bank, but not to the central government. Ricardo felt the circulation of money and the decision behind how much is available at any time should not be entrusted to the state or any individual. So we could now take this argument. Now this isn't what I want to get to, but let's talk about this. I break it down where the central government and the central bank of the United States responded to COVID. They didn't communicate with each other. You understand? They were not communicating with each other. So they each did 5 trillion. The central bank added 5 trillion and can remove 5 trillion. The central government added 5 trillion and it's stuck. And even Ricardo in 1816 said this would be a mistake. And was against it. He was for central banking, but with the idea that the central bank would be independent from the government because you wouldn't want the government to come in and say, hey, print some money. See, look at this. Ricardo felt the circulation of money and the decision behind how much money. Isn't that amazing? 200 years ago, we already knew some of the mistakes that we're making now. And then you go through here with your valuation of money, which I've taught you many times. Okay. Now this one might include the velocity of money, but we can go there. So but here's the thing I wanted to get to. I mean, look at this, Ricardian theory of international trade. So it's in here somewhere. The comparative advantage, which I teach you in the macro course, protectionism, I cover that quite a bit. I wanted to get to the point where, as a trader, one of the things he talked about, and I guess we're going to have to read one of his books, but he's talking about how he made his own personal fortune. So we're not talking about a theory now, not a book he wrote. But one of the things that he did to earn his fortune and become, a multi-millionaire, back when millions is like billions, like how did he become a billionaire in today's money? He traded bonds, but also currencies because of international trade influenced by the war and by the corn laws. So think about it. He was a fixed income commodity and currency trader. He was just like you and I. And one of the things he talks about in one of his books, and I don't recall which one, and it's not in this Wikipedia, but his advice was to keep your losers small and let your winners run. A universal truth. But this was part of how he made money. Now, he might have learned from his dad. His father was a successful stockbroker. And Ricardo started working with his dad at 14. Okay. Anyways, who would have thought stock trading, commodity trading, fixed income trading, foreign exchange trading, all written down hundreds of years ago? I think it's fascinating, huh? I think it's totally fascinating. All right, sorry for geeking out on that. Just imagine, though, the people in charge had a sense of history. Wouldn't wouldn't they make potentially less mistakes? I mean, it's one of these things where somebody says, well, we haven't had inflation for 40 years. Yeah, well, we fought it for 140 years. So not having it for 40 years is a good thing. So doing the opposite would be a bad thing. Okay? So it makes me think, like, if we read the right books, okay? Like Ray Dalio will say, read his 800-page book, and he'll tell you based on all he's done and all his research, what it all shows, he'll show you what he thinks based on what he studied and analyzed in history. I would take it from a different point of view or a different angle of attack, let's say. And instead of me saying, here's all my research, what I showed you, and here's what I think the future of the world's like, trust me, I'm a billionaire, I'd rather say, well, let's talk to other successful traders and investors that were around hundreds of years ago and see what kind of advice they would give us now based on their experience back then. We find out there are universal truths, and we might just be breaking some dumbass cliche mistake that we knew was a mistake 450 years ago. I'm reading Marcus Aurelius from 2,000 years ago, and his advice is as sage as it would be appropriate for today. So it would be like, what's the excuse of not knowing now? And some people will say, well, look at the track record, or let's say the resume of a politician. So I'll pick Biden, for example. All right, cool. What has Biden done with his life? He worked in the government. All right, any other measure of success? No. All right. And now you're like, oh, that's not fair. All right, whatever. But I'm not being political. He's just the current president. And you're like, so what has he done? Yeah, an incredibly mediocre politician for the last 40 years. So, anyways, some people are just going to get so mad. Look, I'm not picking on them per se. I'm not saying one group is better than the other. But other than being a politician, I don't know if he understands economics. I don't. Maybe he does. Maybe he's a genius with economics. Maybe he sits and reads at night economic history. Or game theory or something. I don't know. But it doesn't appear so. Anyways, let's take a look at what's going on. China, 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 China. Okay? The big thing, right? Come on, man. Yeah, China, China, China. So we could do China fixing exchange rate. I didn't know what to type in. I don't really have it. 2019. All right, let's not do Japanese bond yields. Let's do a China. A China. Let's take a look. I want to do the currency fix, though, not the yield. I don't even know if these guys track it. How do I just jump to like China, everything China? Markets, currencies, bonds, crypto. Guess what we can do? I'll try this. Yeah, maybe we can do this. All right. All right, take a look. What's interesting about that chart? Huh? What do you think? What's interesting about this chart? Well, you might say US dollar strength, which is definitely possibly true. The second part of it, well, you don't know if it's peaking. You can't be able to say that, Richard, because it's only made a higher high. So you can't say there's a peak. You can't say there's a peak till there's a double top. Otherwise, you're just guessing, right? Okay. So I'm not saying peak. You can't say peak, but the yuan is weak. The Chinese offshore yuan is weak. Okay, great. Robert says, well, the sign of the takeoff isn't obvious. Why? What Robert's saying here is it just magically, suddenly spiked. However, I want you to think about something. Who's in control of this currency pair? The market or somebody else? Well, let's break this down. Who decides the value of the US dollar? Let's break this down. Who decides the value of the US dollar? How is that decided? Today, the US dollar is worth what? Who decides? No, not really. The Fed interacts with the market to set rates. Okay? And they can impact money supply, but it's not a direct decision to change the foreign exchange value or the value of the currency. They're not changing the value directly. Now the Treasury, Peter says Treasury, well, they decide, if they want to change the quantity of money. The Fed impacts more credit, which is money, but it's not money. But here's what I'm trying to get to. The government, right? The Chinese government, when it comes to their currency, fixes it every day. They fix the value of their currency. There's a human being that presses a button and says, this is the value of the yuan. With the US dollar, it's market forces. It's free floating. It's a floating currency. The value of the dollar is based on the supply and demand of the dollar. The value of the yuan is based on what the Chinese government says it's worth. And you can see for quite some time, okay, the yuan was getting strong relative to the dollar. And then we get lockdown, and what does China do? Boom. weakens the currency to support their economy. But that's based, like, China wants that. That's not the market per se. So that's one unique aspect of China, is the government, in this case the central bank, I believe it's the central bank, it might be the treasury, but I think it's the central bank, every single day changes the value of the currency. Okay. And right now they're weakening the currency to help support the economy. But what they need to do is fix their COVID problem. Okay, so anyways, this matters, right? China, China, China. You could say, oh, well, China is in lockdown. The economy is starting to hurt, and they're already devaluing their currency. So if you were sitting down with a millionaire or a billionaire and you're trying to sound smart so that maybe they'll give you some money to trade with, you would drop this knowledge on them, and they're like, oh my God, not only are you humble and beautiful, but you're the smartest person I know. Would you please do me the honor of taking my money and trading it in fixed income, commodities, and currencies? Will you be my Ricardo? Now, when you're telling economic history jokes, you know you're geeking out. Will you be my Ricardo? So anyway, so that's a big deal. Okay, big deal, but mostly I would expect not great news, and therefore maybe continued devaluation of the Chinese yuan. Cool. Okay. How's Germany doing? That's on Wednesday. Okay. European economic growth forecast. That sounds interesting to me. Okay. There's a good update there. They're like, yeah, everything's golden. Were they worried about the war, China, inflation? Yeah. So if they cut growth, Richard, I wouldn't say it that way. I know what you're saying, but it matters when the manufacturer for the world is closed indefinitely. Okay? And what's remarkable what's remarkable here is that all the central banking activity that we have around the world impacts demand only. So if they raise interest rates, make borrowing money more expensive, and devalue your assets, it kills demand. Demand falls from this level of demand, D1, to this new level of demand, D2. So demand has fallen. Therefore, we went from price 1 to price 2, which means inflation fell. All right. Okay, so it kills demand. Okay. So that's one way of lowering, right? The problem is we don't have a demand, we don't have a demand problem. Like I don't think we have too much demand. We used to. I think people, I think it was Bank of America saying 2/3 of people that didn't have $5,000 in their account, and then they got government money, stimulus money, then suddenly they had $5,000 in their account. Then Bank of America said they no longer have that money, they spent it. And the biggest thing they consumed was food and beverages. So they either went to the grocery store or they went to the bar. And they've consumed that food and it's gone. So that money is just gone. It's in circulation. That's why we have inflation. But that's gone, and so maybe demand kind of normalizes, where we might have had too much demand at first, and now we probably have an okay level of demand. But the problem now is supply is low. So the quantity and supply went from, okay, the supply went from this level to this new level. So the quantity supplied is now down. However, prices went up. And so if we're in the situation where you have a double shift, the answer to the question, what happens if there's a double shift? Supply falls, but demand falls. The answer to this is always indeterminate. So demand has fallen, supply has fallen, and depending on how much demand actually falls, and depending on how much supply actually falls, because now a chart like this is very subjective, they're not going to, supply and demand are going to shift differently, and to what degree, you could say it's indeterminate, because it could fall just as much as you get back to where we were, P1, right? So supply falls, prices go up, but demand falls, so prices come down, and you get back to where you were. There's just less people with money and less stuff to buy. Socialism. Anyways, so stepping into the market, I always think is a very bad thing, and it's interesting to see Ricardo 200 years ago say the same thing. Like, you need a central bank, but you don't want the bank, or worse, the government controlling the bank, because the government is always going to step in and buy votes, and it's always a bad thing. But partially is getting back to normal might just be so they can cut interest rates in the future. Raising interest rates doesn't solve the immediate problem. The immediate problem is there's no supply. So going back to the question about China, what's at stake is not that China caught a cold. It's just like, well, there's nothing to buy, and some people and businesses need to buy stuff. And therefore, because supply is low, you have to pay too much. So now the government comes in and says, well, you can borrow the money, but you're going to have to pay more to borrow it, to buy the stuff you can't get but need to stay in business. It's sort of weird, isn't it? So you kill the business, lay people off, and there still isn't anything to buy. It's weird, right? There still isn't anything to buy. But now you're out of a job. You're like, well, good. There's nothing to buy, and that's a good thing, because I got no money anyway. So, So, inflation, it is this week. That's interesting. Yeah, fairly early in the month. Interesting. All right, so we got U.S. CPI this week. Obviously a big deal. UK GDP. PPI coming out later on Thursday for us. So it's a fairly quiet week. That's all right. Big one being CPI. Now, if you study behavioral finance, you will find yourself in this situation now where good news is probably bad and bad news is probably good. So be careful. So if inflation is high, the Fed will have to raise interest rates significantly higher, higher terminal rate, higher neutral rate, maybe rate of change increases, and that kills the stock market and everything comes down. Okay? A surprisingly lower number than expected, which is still a high number, but could be a sign that, or at least the Fed will pitch it like, their policies are already showing signs of working. You're like, dude, it takes a year for the Fed stuff to hit. But whatever, they'll say, see, look, it's working. And so a lower CPI might say lower neutral rate, slower rate of change, lower terminal rate, stock market up, game on. David says, why is a recession in the UK a surprise? It's not a surprise. The Bank of England has reported that it will likely happen. So it's not a surprise, it's a confirmation. Okay. How do they get inflation down? Well, make everybody poor. Okay? But that's not very effective. Okay? Because there are plenty of poor countries with high prices. Why? Well, poor countries generally have high levels of unemployment. People don't do anything. There's a low level of per capita GDP, what we call, right, unproductivity. They're very actively not doing anything. So this low productivity means there's low levels of quantity. So there's no money and scarcity at the same time. You have to understand economics is the social study of scarcity. So in a poor country, there's no money, but prices are high. So we want to avoid that, in my opinion, but that's kind of where we're going. Because we can cause a recession, we can cause people to lose their jobs, prices would moderate because of lower demand, but there still isn't any supply, which is our big issue. So now people will lose their jobs, the value of their home will fall, the value of their retirement account will fall, and it'll still cost you too much money to buy something, right? Like I used to say, like every time I went to, what's that big warehouse? Sam's Club. Right across the street, there's a Costco. So you go to one of these things, and I just loved watching OLED TVs get bigger and bigger and cheaper. And under this circumstance, that might not happen, where year over year TVs might not get cheaper. Maybe they even get more expensive. The glass, the gold, the copper, everything that goes in to making those TVs has gone up in price. Meanwhile, the factories are shut down anyways, so there's less and less TVs. But to act, the microeconomics suggests the per unit cost of the TV should go up. Plus, you can't even get one anyway. So when one rolls into the store, Sam's Club, and it's like, here's a 60-inch OLED TV, it ain't on sale, brother. You got to pay full price, maybe more. Okay, so how do you get price down. Fix the supply problem. Okay? Fix the supply problem. Open up China. So anyways, it's a decent week. There's not a lot of stuff to get in our way. Okay, cool. So let's do gold, oil, and Bitcoin now. I'm going to run an ad on behalf of YouTube. I want YouTube to be super rich and successful. My oh my, WTI. We're below the moving average. The stock market opened. It was at 108.50. Now it's at 107. That's $1.50 in the last hour. That's equivalent to 150 pips on the euro dollar. 150 pips in an hour, bro. Okay. Richard says bringing commodity prices down would help. Well, the thing is, Americans may drive this summer during summer holidays. They're going to drive to the beach. They're going to drive to grandma's house. That fuel has already been refined and put into storage. So even if oil prices drop from 111 back down to 100, probably won't impact the value of gasoline, and that's what matters. That's already been, the crude oil was purchased months ago and then cracked and refined into product. One of those products is gasoline and diesel, two different products actually, right? Unleaded gasoline and diesel. Cool. It's already been made. It's already in inventory, and that future demand will increase this summer, and that supply is already there. So if it cost a lot to make it a month and a half ago, or last month, okay, then prices are kind of set. So if it was expensive to make last week or 2 weeks ago, then that's the cost, and they had the refiners sold it to the distributors and to the retailers at that higher price 2 weeks ago, and now they're going to pass that on to you. Meanwhile, you get all mad because you're like, man, oil dropped from 111 to 104 and they're gouging us because gasoline prices are still high at the pump. Yeah, well, they didn't make the gas that morning. I get mad at the media where they're just like, they're gouging us. No. No. We have a competitive landscape. Not only do we have dozens of gasoline retailers, but we have millions of locations. And the consumer is highly sensitive to prices. If a gas station is 1 cent higher than another one, many people will just go across the street and go to the cheaper one. There is some brand loyalty, but very often you're like, do you know the difference between Racetrack and Quick Trip? You're like, who cares, right? So you're like, hey man, that one, Racetrack's 1 penny cheaper. You go to that one, right? So how could they be gouging us? That's not how capitalism works. Okay, now you might pay 1 penny more if they have clean bathrooms. Now they're providing a value add. But people generally don't overpay for gasoline. So what is really happening? Well, something 2 months ago happened. that pushed up gas prices today. But anyways. So here he is, and here we shall be. Even in the last 15 minutes, man, that's a ginormous drop. Okay? Watch this. No. Price action? Yeah. Once again, you need to learn how to trade some basic, with some basic knowledge. If you're missing things like that, yeah. Anyways, I'll just leave it at that. Join FX Bootcamp, everybody. All right. So anyways, that's not up in the moment. Now, let's take a look what is up in the moment. Risk on Bitcoin. Risk on Bitcoin. Okay. So we have not made a higher high on a 4-hour yet, but it's thinking about it. But look at this big move down. We're in the low 30s, man. Okay. It matters. I'm going to connect some of these other things here. Low. Okay, what do you think? Tickle either 28 or 30? Hoorah! So anyways, right now, it looks like it's trying to go up. I think a bear, and it's been bearish for a while, but a bear, like here's the gap over the weekend. Okay, a bear is going to look for something like that. Okay, bulls would need to take this quite a bit higher before it truly becomes bullish. Okay, why? Well, bulls only buy double bottoms. Is that a double bottom? Is this a double bottom? It's not a double bottom on this time frame. Okay. The second would be higher lows. Is this a higher low? Okay. Well, you would want to see a higher high, or have to see a higher high before a higher low. So it's all green. So the one plan that's going right now, when you see green in a downtrend, is you prepare to sell. Because you're a boss. Okay. Like a boss. Like, look at that green candle. Fools. Yeah. Take it down. Bring it down. Bring it down. Bring it down. Bring it down. Anyways. So that's that. And some gold. Okay. Little bit of fib wars going on here. This one's trickier. Okay. Higher high. Okay. Higher low. Somebody tried it and then it failed because it's also a lower high. And you're like, but how am I supposed? Dude, sometimes you just don't. You don't know. Joseph, actually, that would make me very happy, Joseph. That's how I can answer that. That would make me very happy. I'd like to do Cape Town, I think. I think I'd like to do Cape Town this time. So anyways, gold, okay, you could treat it like a bottom. So you could call that a double bottom. And you could confirm it with a higher high, higher low. I don't have any friends, Joseph. Actually, I'm being facetious, but realistically, all my friends are already multimillionaires and they're fine. They're set. It's all done. There's nothing to do. Yeah, most of my guy friends, they don't work. They don't have jobs or anything. So no, they're fine. They don't need money. They have money, so it's just all locked up. Yeah, like I hear stories. I hear stories. Like my buddies, they when we get together as a family or something, the wives are talking. They're like, yeah, we're really trying to cut back on our expenses. We're trying to be prudent. And then like 2 weeks later, they're like, yeah, we just bought a Disney package for $150,000. I'm like, what? Oh yeah, when we get to go to Disney twice, 3 times a year, and we get to stay in the fabulous, VIP area, and we get this benefit and that benefit. I'm like, you spent $150,000 on Disney? And they're like, yeah, well, it's also, $20,000 maintenance fee per year. I'm like, and you're saving money. Oh my God. Oh my God. $150,000 on Disney. It's just like it. Yeah. Anyway. So no. No. Yeah. It's just funny. Like, how can you call that saving money? We're trying to be prudent. Uh-huh. So then you drag this across, right? I need you to trade. I need you to trade. Right? Like that. So maybe. Today is supposed to be a risk-off day, which means it'll probably end up being a risk-on day, but I'm not going to predict that. Oil's coming down. See, that's good, right? No, maybe. Is it a supply thing? Is it a demand thing? My guess for the week is I'll be buying this back up. So I hope it falls quite a bit. I'd like to start again around 100. See you, Joe Moo. Yeah, I'm going to go to Joe Moo. So everybody have a wonderful day. If you're in my day trading group, I will meet you this afternoon or this evening to set up trades for Asia and Europe, pre-Asia. So I'll see you at the 7 p.m. So again, peace on earth. May the pips be with you. May our profits be above average. And thank you to Traders Way for being part of our community. And check out all those awesome resources below today's video if you're watching the recording. Many things are free. Some things cost money. But there's no reason you can't find help. You can. I'm here for you every day, but only for the last 20 years.